In this video, we're going to talk about Abbott Labs. They reported their earnings on January 22nd, and their numbers were in line with Wall Street estimates. Now, this article from investing.com states that shares dipped on revenue miss. However, when you look at the daily chart, all I see is a green line heading upwards. Now, after further examination, you can see that the article came out at 7:07 a.m. before the market opened. And what you can see from these two candles here, this is the day that they announced the earnings, price traded below the previous day's close, dipped, but then moved higher. Meaning, price dipped to find unfilled buy orders before moving higher. This is a rally. That's one basic candle, and then the rally out. Price pulls back and then resumes its upward trajectory. You can probably see that better on the, on the 4-hour chart we'll go. Maybe even on the 1-hour chart. So this is the previous day. You have a gap higher, and the day of the news, price gaps down into a daily buy level and then shoots higher. Now stay tuned to the end of the video. We're going to look at where price could be heading next based on the higher time frames, starting with the monthly chart. So Abbott reported fourth quarter earnings that met analyst expectations. Healthcare products company posted adjusted earnings per share of $1.34, in line with the consensus forecast. Revenue for the quarter rose 7.2% year over year, just shy of the $11.03 billion analysts were expecting. Now, for the full year 2024, Abbott achieved $42 billion in sales, up 4.6% on a reported basis. Organic sales growth for the underlying base business, excluding COVID-19 testing, increased 9.6%. The CEO said they finished the year with the very strong momentum. Sales growth and earnings per share growth in the fourth quarter were the highest of the year. All right, so with that said, we're going to go back to the higher time frames. This is the monthly chart. And you do have a level of interest at $128, which has served as resistance in the past. Price has memory, and so this would be a level where I would take some off the table. Now scrolling down to the weekly chart, I want to go up and to the left, and I'm going to bump that level to 130. Why? Well, that's where you have the most recent resistance. And 130 just happens to be a psychological round hole level. Above 130, you do have this wick over wick in the form of a gap. So if we go to the daily chart and we check out that level, now this gap is an extended range red candle. You have a basic candle and then the drop down at 131 would be your daily sell level, making the 130 level a stronger resistance level to take some off the table. However, price does not go up in a straight line, despite what this chart looks like. I do anticipate a pullback before the next impulse move higher. We could see price pull back to what was local resistance. Could be now support. Take some off the table at the $130 level. Thanks for watching. Subscribe. Please like the video.